Hello and welcome to Half Hour Power Hour. I am Jill Van Dusen and I have my very special guest, very good friend of mine for many years, Rusty Mendoza with Finance of America. Thank you so much, Rusty, for joining today.
My pleasure.
And I'll tell you just in a moment of what we're going to be talking about because it's super important if you're looking to buy and your offer is not being accepted. So as you guys know, Half Hour Power Hour, we actually had our 1-year anniversary last year. And thank you so much for all of your support. Right now, we are actually going to be in segment 2. We're going to talk about the buying side. We just spent 4 weeks talking about the listing side and what to expect and how to choose that right offer. And now as a buyer, what do you do if you are looking to get that offer accepted as well? So we are going to start episode 1 of the buying side. And so that's why I have my very good friend Rusty Mendoza here. He is a wealth of information. And this is actually pre-recorded. It's Monday the 12th, and you guys will be seeing this on Thursday. So Rusty, let's get started because this part cannot happen without you for the buyers. And we're gonna be talking about the pre-approval process. And so tell us first, are you seeing the pre-approvals? Because we know in today's market, there has to be a pre-approval. You shouldn't even be going out looking for a home without a pre-approval. What is that looking like right now? And what do you think people could be doing differently so that they have done their homework before the offer?
Yeah, I think first and foremost is just as soon as you know that you want to buy a home, and even if it's still not a crystal clear goal, but you have questions and there's this thought out there of like, what would it look like to own a home versus renting a home? You should start the pre-approval process. Give Jill a call, talk to Jill about what you're looking to do. Jill will go over the basic information of buying a home, and then in that first step is going to come the pre-approval. So the pre-approval is critical right now because if, as you see on the listing side, you're competing against multiple offers, and most of those offers are already in a place where they're removing the loan contingency, removing the appraisal contingency. So basically, essentially what that means is when the person is making an offer, they're locking themselves into that deal. Of course, you can still do inspections and things like that, but they're basically saying, hey, I'm ready to go. I've got my loan in place. I know I can buy this house from a financing standpoint. So that pre-approval is, it starts off with the pre-qual, and the pre-qual, just as a refresher, is the credit is pulled and the application is reviewed by a loan officer. No documentation is pulled or submitted or anything like that. Just a pre-qual is credit check, loan application reviewed. Does it look good? Yes or no? The next step is a pre-approval where you submit all your documents, your financial documents, your asset documents, any credit documents that are needed for a full pre-approval. In most cases, and in our case, we have our underwriter review it to make sure that everything is pre-underwritten.
Okay, that's a big deal.
Yeah.
And I'm going to stop you right there.
Sure.
Because some of you, and because I really want you to talk about that and really what does that mean for underwriting. So a lot of you may have already gone through the process and you know what to do to buy a home. But a lot of you are also first-time home buyers. And trust me, I've seen first-time home buyers from 600 to 800 and then 300,000. But, and so people are looking on Zillow, Redfin, or sending them properties. There's no point yet in doing that until you talk with Rusty. And so Rusty's gonna get you to a point where your offer can even be looked at. So let's talk about, we talked about the pre-qual, but as we know, that's not enough. We need to get to the pre-approval. And what Rusty is saying is, he's gonna get it so far through underwriting, which is key. So kind of explain that to us because that's one of the huge benefits also of working with First American.
Yep. Exactly. So the underwriter reviews the file. The underwriter says, looks good from a credit standpoint. Income has been verified and validated. Income looks good. And I see your asset plan for where these down payment funds are going to come from. So based on that, we get a pre-approval that has been pre-underwritten. And then at that point, I can fine tune the numbers to reach the max pre-approval. And
okay, that's a big deal.
This is a big deal because, let's just say you want to buy a home for $500,000. Great. most of the time, that home that is listed at $500,000 in this market is going to go over asking price. So if there's 4 or 5 offers, or in some cases 122 that people saw on that home in Citrus Heights.
Poor listing agents in the hospital right now. No, I'm kidding.
So between 1 and 122 offers are going to come in, and if there is a multiple counter offer, basically saying seller will accept such and such, who's in, who's out, and there's a lot of different ways that
Sure.
can occur. But
Yeah.
bottom line is they're going to go over what you submitted your offer at if they're issuing this multiple counter offer. So if your pre-approval letter simply stated 525, for example, which matched your offer, what I've seen is that sometimes you are now put on the outside
Yeah,
rather
totally.
than
Yep.
being a part of the group and
Yep.
that is going to get this multiple counter offer. So in past markets, we would usually make the pre-approval letter match the offer
Yeah.
submitted. But in this market, I'm seeing the best way to go is to have your maximum number be on the pre-approval,
Yeah.
so that way you don't get excluded when the listing agent is going through everybody that she's going
Yeah.
to or he's going to send a multiple counter offer to.
That's a great
So it's important to know your max, and that max can be what you qualify for, or your drop down max of like, I can't afford anything more than this.
That's a good point too.
Yeah,
Right.
so we have to
Right.
reach that point in discussion and dialogue where you know what your absolute max is going into it, and then maybe if you do get a multiple counter offer and say your max is 575, and you didn't want to go over 550, and the counter comes in at 565, well, you don't have to accept it.
Sure.
You can say, I'm sorry, I'm not going above 550, and then the seller can take it or leave it at that point.
Right.
So just because you put your max on the letter doesn't mean that you have to go there, but it just displays the strength. And the strength is the most important thing right now, because we have so many people that are being outbid by somebody that's perceived more stronger.
Yeah.
It's just perceived stronger, and a lot of it is just because people aren't taking an extra step to to be where they need to be.
And so that's a really good point. I love that. And so if you guys are just joining us, what we're talking about is on the buyer segment, the buyer episode number 1. And this is super important because you've got to get pre-approved first. No other way to do it but get pre-approved first. And a lot of times even people won't let you go through their house. They don't want just looky-loos, especially because of COVID. So they want to make sure that they do see the pre-approval. So Rusty, let's talk about too, and if you guys are just joining us or just staying on, we appreciate it. But Rusty's also going to be talking about in just a few minutes about the actual market and if we are in a bubble. But before we go ahead and do that, Rusty, let me know kind of what are you seeing? There's contingency periods. So when you buy a home, it's contingent upon an appraisal. It's contingent upon a loan being pre-approved. But because if they go through you in the underwriting and here's your max, is there room to remove the appraisal so you don't have an appraisal contingency and removing the loan contingency? And are you seeing that in the lower end homes? I know I'm seeing that in the high end homes. But where are you seeing that at a different level or lower end as well?
Definitely lower end as well.
Okay.
I have a first-time home buyer who is buying in Rio Linda right now, and the price that they got accepted was $350.
Okay. Good
The
for
listing
them.
price was $310, and fortunately, these people have done a wonderful job saving up and putting themselves in a position to buy their first home. They do have 10% to put down, and they have additional money that they can go up and above that. So basically what we determined when they were making their offer of $350 on the home that was listed at $310, no appraisal, no loan contingency.
Okay.
And what I saw was they realized that they could go, if the appraisal came in below $335,
Okay.
they were not going to be able to fulfill their obligation of buying the home at $350 with the amount of cash that they had, because they had to pay $15,000 over the contract price. So,
Okay, got it.
So they put a 1% earnest money up at $3,500, and they had felt confident enough in their opinion that the appraiser would come in at least $335 or higher,
Okay.
in which their realtor did a wonderful job educating them on the comps.
Good.
and they also felt that it was a worthwhile risk on their part that they were willing to take because they liked the home. They realized that every single month that home is going up and up and up and up, and they want to be in this going up before it's too late. And
So what was their earnest money deposit?
1%, so $3,500.
Okay, that was good. Good for them. Okay, so they were risking the 1%. They got the house. And where are you guys right now in contract?
They're in contract, yeah, and they're due to close Friday. So,
okay, then it made it through.
Yeah,
Yay,
exactly.
congratulations.
Yeah,
good
thank
job.
you. Yeah.
He's the man. Okay, so you brought up a good point. Okay, so this is really funny because, well, not funny, but when Rusty and I were talking prior, Rusty asked me, and you guys, I know you're asking yourselves this too. Some of you are. I had somebody who said, they asked me to look at this listing, and of course there were multiple offers, and Rusty said, hey, do you ever have people that are like, I don't want to compete? And I said, well, funny you asked that because I do. I had somebody I said, yes, there's multiple offers, and they said, oh, I don't want to compete. And I'm thinking, okay, well, obviously I need to do a better job with it, even though they did lose out on 2 other offers that they put out. I think I need to do a better job with educating this person. But I thought, okay, well, if you don't want to compete, what year do you want to buy a house? Because it's not going to happen this year. So let's talk about that, because then we started talking about the bubble. Are we in a bubble? And I want to hear your answer. Are we in a bubble, Rusty?
No, we're clearly not in a bubble.
That's a big deal.
And I say that from reading publications and various real estate experts that are constantly putting together intelligent pieces of information, and that I'm taking that information, I'm looking at our current market, I'm studying the stats. And of course, nobody can be for certain. Or obviously, anything out of left field could come in and make things change. But
sure,
from all of the things that we have going on right now, there is no bubble indicators going on. No.
Okay, what is a bubble? I'm going to stop you right there. What is a bubble indicator? Because people think they hear something like, we're in a bubble, and so I'm just going to wait. And I'm like, you never know if you made the right decision until it's over.
Right.
So what are bubble indicators? Because we're not in it.
Yeah. So a great bubble indicator, and always hindsight's 2020, as we look back at what happened in 2007 and 2008, the start of the market really crashing, was that there was more than 6 months inventory available for sale. And so what that means is that if you take the number of homes that are selling any given month and you divide that by the total homes that are available for sale on the market, there's going to be more than, if not a single home came onto the market, it would take 6+ months for all that inventory to dry up. What are we at today?
14 days. 14
so
days.
Less than 3 weeks of inventory.
Yeah.
Okay? So what that basically means that if a single home doesn't come on the market, within 14 days, we would no longer have any homes for sale.
Yeah.
With all the buyers that are willing to buy a home. So, that's the first thing, right?
Okay, so we're not there.
Yeah. So then you start to look at the economic trends of what's going on. Okay. So we're in a resetting of our value, which occurred in the Bay Area about 20 years ago, where all of a sudden home went from a reasonable price to all of a sudden it was worth double in a matter of 5 years. And that's what we're seeing today. Like, we are literally going to see homes be astronomically higher than what they are today. Your average home that costs $300,000 today, or $500,000 today, is going to be $800,000, $900,000, $1 million in just a few years. I mean, that's what's going on. Like, it's resetting the market to a point where the bar is no longer here, the bar is now here. And we don't go below that of those bars, right? It's just what's happening. And the big thing was with COVID, when people realized that they no longer are going to have to drive in and live in proximity to where they work. And with companies rechanging their policies around work from home, maybe 1 day a week in the office, or teleworking 1 day, and then basically working from home the rest of the week. We're seeing this massive influx of people coming over from the Bay Area, where they don't want to be in the urban area with the congestion and the traffic. They would rather be over here. and where they have better quality of life, better schools, better education, all those reasons, right? So we're seeing massive amounts of people taking their equity out of the Bay and moving here with it. And they can afford to pay over asking price because, for the most part, our home values are nowhere near in comparison to what their home values are. So we're resetting the market. With those people that are migrating over here, it's changing our dynamics and our landscape really quick.
Okay, so for those of you who are first-time home buyers, please don't be afraid or don't hesitate. Reach out to us. Make sure you're talking with some local experts to guide you and create a plan. Yeah. Because you're paying crazy amount for rent. Yeah. You might as well put this investment towards yourself. And then those of you who own a home and are upsizing, talk to Rusty, see where you can be pre-approved. Or some people are, they may have been renting for a while to see what's gonna happen with the market. You guys just, it's like what Rusty said, we're not in a bubble right now.
Yeah, so the second indicator is just the migration trend that's coming up from the Bay Area and all that equity that's coming into our home prices, right? Yeah. The third thing that I look at is available homes for sale. We talked about a seller's market back in 2006, 2007, where more than 6 months homes were available for sale. Well, and now we have less than 2 weeks or about 2 weeks. Yeah. I remember when there used to be 15,000 plus homes available in Sacramento.
Oh my God.
It's just a regular point. Just just 15,000, give or take. Sometimes it goes up to 17, sometimes it goes down to 13, but it's about 15,000.
The tri-counties?
Yeah,
the tri-counties.
Yeah,
this oh my gosh, this is crazy.
Yeah. And now we have, less than 5,000?
Yeah.
So the tri-counties area has literally shrank threefold in terms of the total number of homes that are available for sale, okay? Well, it's not like population has decreased, or population has actually increased.
Right.
Okay. And not only that, the millennials are entering the housing market at a very fast pace right now. They are, and they're for the most part well qualified people. They've got good jobs. They've got great credit. They've done a good job saving their money. Everything that I've seen with the millennial home buying population is in a good spot to really be homeowners. So that generation is coming into our market when we are at an all-time low homes available for sale. So buying demand is at the hugest disparity that I've seen in 21 years in this business in terms of homes for sale and amount of buying demand. The disparity has never been wider. So there's that dynamics. And then affordability is another piece that I look at. People are able to qualify for homes. I remember when I used to pre-qualify people, most debt ratios were in the 40s. It just was kind of like, income compared to what they were buying. I don't have the exact numbers to back it up, but over 40% wasn't really that big of a deal to see.
Okay.
Now most people are in their 20s, 25, 30%. People can afford these homes. Affordability is not a stretch in most cases. And yes, interest rates go into that, but I think a part of it has just been the credit crunch that we went through from 2008 to 2015, give or take, really cleaned up a lot of people's finances, in which people don't carry a lot of debt like they used to, at least not majority
That's good
of
to
people.
know. Yeah.
And so people can afford the home, so I don't see affordability issues too bad. And we have plenty of room that the prices keep running before they become unaffordable.
Okay, so basically what I'm hearing is, money's cheap because of interest rate. Yeah, go ahead.
Oh, there's one more thing I was going to say. Builders, new homes being built, right? That's where we get additional supply to the resale homes. The builders are in a really tough spot as well, okay? So they have been underproducing the amount of homes that are needed to keep up with buying demand for many years now. And there's been red tape from development reasons.
Oh my gosh, right? Yes. I don't know how they even build homes in this,
know, right?
but keep going, keep going.
Building permits aren't handed out as easy, and they need to say what's where. So builders have had a really tough time keeping up with the amount of home inventory that is needed. So that's been undersupply every single year, okay, since 2012.
Okay.
Yeah. in addition to that, now we had COVID, and when you look at the graph of what builder activity did, it just kind of just went boom down to this valley and then shot back up again. So there was like this 6-month window where there were home activity, homes weren't being built. And it was for, you know, all of the reasons why we had a shelter in place and all that sort of stuff for crippling builders, right? And so that now they have this 6-month gap where homes weren't going up when they needed to go up, and that's going into this equation as well. So we have that thrown into the equation, which is going to create further undersupply. Now here we are coming out of COVID, hopefully, and lumber has gone up from about $10 for a 4x8 piece of plywood to $88 for a 4x8 piece of plywood. I mean, it is ridiculous.
That's nuts. I mean, think about that.
Yeah, I mean, eightfold. And 2 years, we've gone up eightfold.
I hope you guys are paying attention to this.
2 years.
Because this is a big deal of how this is all going to evolve and work. So go ahead, I'm sorry.
Yeah, so if lumber prices have gone up eightfold, the builder's profit margin has shrunk immediately if they were going to try and sell that home at what they thought they were. So if they do have the profit margin built in to be able to build the home up great, well, those are the homes that are going up. If they don't, they're waiting for these comps to catch up.
Okay, explain that.
Well,
okay.
It's just like if I can delay building on this lot for 6 months, 12 months, or slow down the pace that this home is built.
Okay.
3 months, 2 months. I mean, you can't slow down too much, but they can decide when they want that home to go up. And if it isn't profitable right now, then they're going to choose at some point in the future when it will become profitable, and they're watching the home prices go up. So we're seeing a lot of builders choose to delay building for that reason, because they see the home prices going like this. So they know that holding it isn't going to be a bad deal for them.
Right.
And then they just look at the cost and compare it. Can I afford to do this? And the answer, majority of the time, is yes, they can.
Yeah.
Now, they will start it at some point down the road in anticipation of catching on the other end at the price point that they need. But the bottom line is that they're not going full force and building their homes up at the pace that we need them to. So that's slowing the available home supply and keeping it steady as the home prices continue to rise. So personally, I have zero concerns about buying a home in this market. And Jill just helped me last September, so.
And look at what your house is probably worth right now. Should we put it on the market? I have a buyer, the Mazzonis. They would buy your house. Okay, so some really, really good points. And here's what's interesting too. On the resale side, we don't have that problem. So if you're going to think about listing your house, you already have the lumber in your wall, so you're good to go. And then I have a couple of trees that can be knocked down, and I'll just charge half to the builder if they want a couple of my trees so they can have lumber. Okay, so what I'm hearing right now is, you guys, if you're on the fence, please just reach out. This is an investment for yourself. As Rusty is saying, we are not in a bubble, we're in a bonfire. That was the word you used earlier.
It's just one match thrown after another, and it's blowing into a real estate bonfire. I mean, it's on fire. Interest rates should rise, gradually as the year goes on, and that's going to have some impact, but it's going to be mostly warmly welcomed because it's not going to kill off buyer demand by any means if rates go up 4% or 4.5%.
Okay, right, because that was a dream, 4%. And now we're like, oh my gosh, it's 3.5%. What? But you know what? And also then do things now because the interest rates are low. And I think what's really important of episode 1, it's talking about the pre-approval. So even if you're like, I've done this before, I have great credit, I'm good to go. And make sure you don't go buy a boat, because sometimes people, if you guys are in contract right now, please don't go buy a big purchase item and talk to your lender first because that could really change things. And then just make sure you're getting pre-approved now because there's really no point in going out and looking if you're not. And then
Unless you can pay cash.
Unless you can pay cash.
And
Okay.
you can prove the bank statement, ready to go, saying I can pay cash for this house.
Yeah. Okay, let's talk about that too, because a lot of people are up against cash. And you guys, please don't hesitate to make an offer against cash, because sometimes that it could be an apples to apples, but your offer still might be taken. Okay, so make sure you're doing your due diligence, and just, you know, don't be afraid of that. So for example, if somebody keeps losing out because of cash, is there any options that they can do that you can think of, like? But you close quick, Rusty.
Yeah.
I mean, cash. Sometimes, I mean, I'm seeing cash 14 and 25 days. You can close if everybody goes through underwriting, does what you just said.
Yeah.
You can close in what, 21 days?
Easily, yeah.
Yeah, and you've done that. I mean, you did
yeah.
that, like, I think 17 days in December for the Robs. I mean, you were like, or 14 days. So, what about like a private money loan or anything like that?
Well, that's a little bit
interim?
more difficult to come by because of the regulations around private money lending. But there could be options there. I mean, most of the time somebody that's offering cash isn't going to be maybe as aggressive as somebody that's getting financing, because they expect maybe inherently to get a little bit better deal because they're paying all cash. I mean, we were up against all cash in our offer, and the stars just aligned so that the seller felt motivated to sell to my family. You know? And you know, you have a unique situation that might fit well for that seller, and you know, you bring your uniqueness into the situation. If you've done all your homework, you've gotten pre-approved, you know your maximum that you can go to, you know which contingencies you can lift, you know your losses that you're comfortable prepared to take if things go completely wrong. Like, you are now putting yourself in a situation for that seller to feel your uniqueness out of your situation, and maybe that's the home that's meant to be. So,
and you know what? Yours is like a testimonial story, because, we were up against cash, and it was at the beginning contingent upon you selling a home. That's how we wrote the. Hello! Oh my gosh!
Yes.
That's a good testimonial, you guys. So don't hesitate. I mean, you're right. The seller did pick your offer. Yeah, good job, Rusty.
yeah, so don't be discouraged. I
Yeah.
mean, if you've got a contingency, if you've got things that are going that may be against you,
Right.
you know, with the right team in place and the right strategy, we can make it happen. And it really just takes your willingness and you putting yourself in a position where you're willing to listen to the experts who have done it for ourselves, and continue to do it for others every single week. So
That's what we're here for.
Yeah.
Yeah. Okay, so before we wrap it up, anything else that we should be talking about for on the pre-approval side?
So there's some things that I like to do for my clients that are concerned about paying up and over list price, or say price that they're comfortable with. So I have a great forecast tool that we plug in the address of the home, in which it looks at all of the data in that neighborhood, and it looks at what's going on from a whole bunch of different factors, and it says, okay, if the home is going to be, if you're willing to pay, or if you're having to pay, say, $750 for a home that's listed at $650.
Okay.
What does that look like to your long-term financial picture going $100,000 over the ask price? And it will calculate all that sort of stuff and give you a nice little graph where you can say, okay, here's where you're at here, and so maybe you're buying, maybe the home is only worth $700 and you went $750. And then at what point does it cross here, and what's going to happen in the future, right? So you can see from a visual standpoint, what does this decision have on your finances? So I think that's a great tool. If anybody that wants to see that, just reach out. I'm happy to run those scenarios.
That's really cool, you guys. And you'll see Rusty's information, of course, on the comment section.
Absolutely.
So that's a big deal.
Yeah. And then the other thing is, I'm encouraging people to that might be a little bit cash strapped, is we get into this brainstorm of where else can we get cash from? You know, what's it look like getting a 401k loan? What does it look like, borrowing from mom and dad against your,
Right.
estate. Going into those discussions of where can we get some cash in hidden places that we hadn't thought about to be able to make this move happen. And for most of the people that I'm working with, this is that aren't first-time home buyers. First-time home buyers, we're looking at more a realistic approach where, okay, let's get in the housing market. This isn't for the forever home,
right,
but we get into the home now, and then we can kind of figure out where we go from there. But for the people that are move-up buyers, we're going into more of a long-term picture, 10, 15, 20 years. It's okay if we have to tap into other places that we hadn't thought of for cash in a lot of cases, because this is your home. This is where you're going to raise your families. This is where you're going to make your memories.
Yeah.
This is going to be your comfort, your lifestyle. And, with the calculated, well-thought-out decision, I think there's tons of opportunity there to make that happen by looking at other places where we can come up with cash.
And that's what's great about you, Rusty, because there's always a strategy. You always have a plan. So if somebody can't do something now or is hesitant, you always lay it out, and then to have that what was it, a calculate?
The graph, and you look at the long-term picture.
Yes, that's awesome. That's really cool. Okay, so gosh, there's like 50 questions that just came through my head that I was going to ask you. So when do you think interest rates are going to go up, and why?
Well, we've already started to see them go up. Great question, by the way. We've already started to see them go up. We were about anywhere from 2.5 to 2.75 at the low, which was pretty much before Biden took office, not to anything, but right around January 5th.
We're just talking about dates and facts. Yeah.
It's just around that date.
Yeah.
And then they've been slowly trending upward ever since then. And we're about, depending on the scenario, 3% to 3.25% right now. So we've come up about 0.5% rates. I think they're going to continue to rise up as the pandemic hopefully kind of wins out. And based on everything that I can see, I think we should reach that next tier where businesses are full capacity, and masks aren't as much of a mandate as they are today by mid to later part this summer. And at that point, I expect the rates to start to trend up quite a bit more at that point. To what extent? The feds aren't going to let them get out of control because they can't afford to have that happen. Right now, we need to keep the economy going.
Right.
So I think they're probably going to settle somewhere in the upper 3s by the end of this year. And then
still not bad.
Yeah, still great by all means. But at some point after there's about a 9-month lag from the time that a stimulus hits to the economy stops feeling that hit. So with this,
that's a good point.
Yeah, so with this latest round of stimulus, we've had, I've lost track of how many trillion now has been stimulating our economy, but at some point after that last stimulus goes out, the 9-month window after that, we're going to see a lag. And the Fed's goal is to have got us far along into businesses being reopened and everything going on that we can stand on our own 2 feet. Or at least with traditional quantitative easing methods, being able to allow us to lead ourselves out of the next recession. So I do think there's going to be another recession at some point in 2022, 2023. And then at that point, I think we'll see rates come back down, and whether they go below 3 again is anybody's guess. But I think they're going to raise back up and then come back down.
And you bring up that recession word, and we'll eventually talk about that when I have you back on too, or when it's starting to come back, because people freak out about recession, but it doesn't really affect us too much.
No, not so bad. Yeah.
No. Okay, so Rusty, thank you so much. And of course, always a wealth of information. Rusty is my go-to guy for everything. Oh, one more question, and then we're going to talk about what to expect next week. Investors. Okay, because of everything that you just said, and prices going up, and the bar has not been set yet, is that why that's why investors are still buying?
Oh, absolutely.
Yeah. Because if investors thought, oh no, it's too high, they're not going to, but they are still investing.
Very much so.
Yeah. Are you seeing a lot of that here, or more so out of state? Okay, so here too.
Yeah, still in California. I mean,
Okay.
I mean, people that are, I would say, farther along in their real estate investing career are buying California real estate. You know, there's only one California. People that are just getting started into their real estate investing career may be more inclined to look in other places. But personally, you know, my philosophy is if you know the market and you know what the prices are going to do and you can afford to buy an investment property there's no better place to buy than your own backyard.
Right.
I like to buy where I would always live, right?
Yeah.
So if I wouldn't live there, then I probably wouldn't invest there.
Good point.
You know, so,
right. Yeah.
So that's the way I look at real estate investing. But yeah, there's still a ton of investor activity.
And how much do you have to put down for investment? Minimum?
Depending. I mean, if you're 15% for like a single family residence, and then
okay.
and then as multi-units,
Yeah.
it require a little bit more.
Okay, 15%.
So, yeah.
Okay. Take some money out of your home equity. Can you refinance and do that? Can you do that?
You can pull out equity from a primary to
Okay.
buy, or another investment that you've got the property equity margin in.
Okay.
Sure.
See, there's
absolutely.
options. You guys, California real estate, you really can't go wrong for California real estate anyway. So everybody, thank you so much for joining us, Half Hour Power Hour. And of course, I had one of my very favorite people here on earth, Rusty Mendoza with Finance of America. Thank you so much. And as you can see, he is a wealth of information, and he can get your pre-approval and you actually have an amazing person, Fran, who works for you, who I love. But you guys go ahead, get started. Don't hesitate. If you want to talk to Rusty, give him a call. He will walk you through all the steps. He does make it easy for you. That's what we're here for. Call me if you have any questions. And then next week on episode 2, all right, now that you're pre-approved with Rusty, what do we do next? Well, you guys, let's go house shopping. So I'm going to talk to you about that, how to get the right house for you. And then we're also going to talk about shopping at new home builds, because let's see what happens there and what that comparison is like. So thanks again, you guguys. Thank you, Rusty, for everything. Tell Corey, James, and Stella, my other favorite people, hello for me. And go James with baseball. And Stella with her horseback riding. Anyway, I'll talk to you guys later. Thank you, and see you next week.